You can watch NewsNation Special Report weeknights at 11 Eastern, 10 Central. Well, now to a NewsNation economy alert. The U.S. added more than 370,000 jobs in June, with unemployment remaining at 3.6%. That is a 50-year low. Well, the markets, though, had mixed reaction to this news, with the Dow and the S&P closing down, but the NASDAQ finishing up. NewsNation correspondent Marky Martin reports on what these numbers mean for Americans.
The Labor Department releasing strong employment figures on Friday. 372,000 jobs were added last month. The most notable hiring gains seen in industries like leisure, hospitality, and healthcare. And for the fourth month in a row, the unemployment rate held steady at 3.6%.
If you are someone that's out there that is unemployed, you're seeking a job, or if you want to switch jobs, you will be able to find a job.
Kristen Myers, editor-in-chief of The Balance, says today's report was a sigh of relief. Average hourly pay even rose by 10 cents.
The reason this month's jobs report is so important is because right now the Federal Reserve is trying to fight inflation. That is their big task right now. And fighting inflation impacts all of us.
Back in May, Americans watched consumer prices rise to a 40-year high. But not just on big staples like gas and groceries. For example, haircut prices are up more than 6% from last year, the largest annual increase for haircuts since the 1980s. This weekend, postage stamps will see a 2-cent increase to 60 cents, a 200% spike from the 80s. And during hard times, pay attention to niche buying trends. Historically, sales have plummeted for men's underwear when people are penny pinching, while lipstick sales have gone on the rise as a form of affordable escapism during times of recession. Marky Martin, NewsNation.
And again, despite news of layoffs and looming economic uncertainty, job growth in June is hotter than expected. The U.S. adding those 372,000 jobs. That is far above the 250,000 estimated before. And here to offer more context to this week's jobs report is economy analyst Kayla Bruun. Thank you so much for being here.
Hi, good evening. Thanks for having me on.
So we were tracking a good news is bad news kind of scenario before these numbers came out, right? Because while we always want good jobs numbers, we don't want the Fed to say the economy is burning too hot and for there to be those big interest rate hikes. So what is the bottom line after we see these numbers come out?
For me, I found the jobs report relatively reassuring, actually. It's true. It beat the estimates for jobs growth a little bit stronger than maybe would have been expected, given that we've seen a slight uptick in layoffs lately, and interest rates have been rising so much, and with inflation holding steady. But I would say that if you look at the bigger context, there are still some signs that the labor market is cooling. For one thing, jobs growth, if you sort of look at the trend over time of how many jobs have been added on a monthly basis, it's really been sort of a slowing trend. And then also I would point to wage growth, which we've seen has slowed to a pace of 5.1% this past month, and it had been around 5.6 just a few months ago. So it's actually falling a bit more behind the pace of inflation, which in the short term is going to cause some economic hardship for wage earners as their purchasing power declines. But it could also be cooling demand, which in the longer run will flow through to inflation.
So, Kayla, in your eyes, what does all of this mean for the possibility of a recession?
That's the million-dollar question, or maybe a bigger number than that. I would point to the strength in the labor market, which actually is something that's a contingency for this sort of soft landing that would be the ideal scenario. We're in a very challenging situation with inflation as high as it is, and the Fed very clear about their intention of slowing it down, and which naturally is going to lead to an uptick in unemployment at some point, and definitely slower jobs growth. So the fact that we're coming from a position of strength in the labor market, and we have seen that there's still an appetite by businesses to hire, that's kind of an optimistic sign that could sort of support the economy through these harder times to some extent. While we do all acknowledge that things need to cool down a bit, there will be some uptick in unemployment and some short-term pain in order to kind of get through this and get inflation back to a more sustainable level.
Well, and we hear that the private sector has rebounded to its pre-pandemic levels of staffing. It still seems an awful lot, though, like many businesses are short-staffed. Why do we see this disconnect here?
A lot of the consumer spending demand really rushed in, I think, a bit faster than was expected. There's also a lot of factors in the labor market that have kind of held back businesses' ability to scale up in time. The pandemic, I can't even emphasize enough the many ways that it really disrupted our behavior, which I'm sure we're all familiar with. It disrupted spending patterns in ways that were very different than before the pandemic, with consumers spending more on goods and less on services. That led to all these supply chain disruptions. And then, so that by itself was confusing for businesses trying to estimate what demand will be when it's so different from what it was before. And then at the same time, on the supply side of labor, it also really disrupted the way we work, the preferences, and kind of a lot of consumers and workers reevaluated, what they looked for in an employer, and kind of what they were willing to do. So there's just been a lot of disruption, and that's been difficult for businesses and has contributed to a lot of the trends we're seeing today, including the high inflation.
All right, Kayla Bruun, thank you so much for your time. We appreciate you trying to interpret some of this for us. Thank you.
Thanks.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.